Are you ready for what could be the most consequential 48 hours on Wall Street this quarter? Tomorrow, three of America's biggest banks report their earnings, and the very next day, the new Fed chair faces Congress. The stakes have rarely been higher for all of us. Hello, everyone. Welcome back to AI Market News. Today, we're covering the market action for July 13th, 2026, as all of us spend this session positioning for this absolutely crucial week. Let's dive right into the schedule. Tomorrow, Tuesday, July 14th, officially kicks off the Q2 earnings season in earnest. We will be keeping a very close eye on Bank of America, JPMorgan, and Goldman Sachs as they set the tone for the entire financial sector. So, why do these specific reports matter so much to us? Well, big bank earnings act as a real-time proxy for the broader economy. Their lending activity, loan loss provisions, and trading revenues show us exactly what corporations and everyday consumers are actually doing with their money right now, rather than just what analysts forecast they'll do. That same day, the June CPI report lands, giving us critical data for gauging inflation. Then Tuesday into Wednesday, newly appointed Fed Chair Kevin Warsh delivers his very first testimony before Congress. As you can see in the chart, the U.S. 10-year Treasury Yield is already climbing to 4.575% as the bond market braces for these events. The mechanism driving this is pretty straightforward. An unscripted Q&A session often reveals a Fed chair's true stance on policy much more clearly than prepared remarks, and that's exactly why these hearings tend to spark immediate market volatility. And throwing a massive geopolitical wrench into our economic outlook is the weekend escalation in the Middle East. Iranian state media reported the Revolutionary Guard would reclose the Strait of Hormuz, which prompted fresh U.S. strikes. Based on available data, the graph shows WTI Crude climbing into the low $74 range during the Asian trading session. Alongside it, the VIX, Wall Street's primary fear gauge, jumped roughly 8% from Friday's close, signaling that we're all pricing in some genuine near-term uncertainty. The crucial takeaway for us here is how this ripples through the global economy. Renewed disruptions to global oil supply push crude prices higher almost immediately, driven simply by fear. That directly elevates consumer inflation expectations, deeply complicating the Fed's fight against inflation, right at the exact moment we're all trying to gauge how the new chair will handle this kind of pressure. Heading into all of this, Friday's session on Wall Street was a stark reminder of how quickly sentiment can swing. Looking at the S&P 500's intraday movement, as you can see in the chart, the index dropped briefly on mid-morning ceasefire rumors, but actually managed a strong recovery by the close. This upward momentum was heavily driven by semiconductor strength, led by NVIDIA, plus a lot of positive buzz around Meta's newest AI model, which really carried U.S. stocks higher through the afternoon. But that relative calm completely evaporated over the weekend and spilled right over into the Asian markets. Notice the steep drop in Japan's Nikkei 250. It fell 1,315 points, or roughly 1.9% early this week. This sharp decline happened because chip-related names sold off heavily in sympathy with the sudden spike in global uncertainty. It just goes to show how incredibly sensitive these tech-heavy global indices are to broader market fears right now. This brilliantly illustrates what happens in currency markets during times of intense stress. Tracking the US dollar against the Japanese yen, the graph shows the USD/JPY pair holding very steady in the low 162 range. Despite the geopolitical risks unfolding all around us, the dollar has found significant support over the past 48 hours. To understand why this is happening, we need to look at safe haven demand. When global uncertainty spikes, capital naturally rotates out of riskier investments and flows directly into assets perceived as supremely secure and liquid, like the US dollar. So, when we all face sudden geopolitical or economic shocks, global investors buy dollars to protect their wealth. That is the exact mechanism keeping the currency so elevated against peers like the yen. According to current market information, here's a look at the economic calendar we should all be preparing for next. Key standouts include the German 12-month Babil auction, the U.S. federal budget balance dropping at 11 a.m. Eastern Time, Japanese industrial production figures at 21:30 Eastern, and India's WPI inflation data at 23:30 Eastern. All of these data points are going to add critical context to what's already a pivotal week. Between massive bank earnings, a highly anticipated Fed chair testimony, and escalating geopolitical disruptions, it's a remarkably complex landscape we're navigating together. Will the Fed stick to its script, or will this weekend's shocks force a sudden pivot? We'll find out in a matter of hours. Thanks for watching. Please subscribe and hit the like button. This video was automatically generated by NotebookLM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.